Today on the Up-Level Dairy podcast, we bring you the October monthly market update from HighGround Dairy. In this episode, get an update on the bird flu in California. Find out how huge crops are keeping feed costs lower. Learn about the cheese markets holding steady and butter prices slipping right here on the Up-Level Dairy podcast. I'm your host, Peggy Coffeen, and it's my mission to bring you the conversations that will up-level your skill set and your mindset so you can be a top performer in the dairy farming business. This episode is brought to you by HighGround Dairy. HighGround Dairy provides global dairy market intelligence, insurance services, futures and options brokerage, and advisory programs to a diverse range of dairy market participants throughout the supply chain. Information shared in this podcast is for educational purposes and is not a solicitation to buy or sell commodities. Opinions expressed are current as of October 21st, 2024 at 3 p.m. Central Standard Time and only represent the views of the speaker and not those of HighGround Dairy Trading, unless otherwise expressly noted. Now let's hear from Curtis Bosma with HighGround Dairy. We're back today with Curtis Bosma, who is here from HighGround Dairy to give us the October markets update. But before we get into the markets, Curtis, where you sit from your seat today in California, you are in an area of the state and really one that the whole nation is looking at right now when it comes to H5N1. Give us a little update. What is going on in California with this bird flu that we've been dealing with in the dairy industry for almost the full year now?
So as of the 21st of October here, we've had confirmed cases from USDA in 331 dairy herds across 14 states. I know it started in Texas and kind of worked its way up through the High Plains, Central Plains, and Upper Midwest. California was not initially impacted by this, but now that it's in California, we've been talking about this, but with the just amount of dairies, the density of dairies, and the size of dairies, it's been moving pretty rapidly. So we're up to currently reported 131 herds within California that have experienced symptoms or reported to USDA. So yeah, it's been pretty significant.
You mentioned the density of dairies in your area, Curtis, and just for those that haven't been to California and have not been to the Central Valley, Curtis, and may not be able to have a perspective of what the density of dairies really looks like in that region, just paint a little bit of a picture so people can get a better understanding for the proximity and the numbers of cows and how close they are together where you're at.
So in California, obviously number one milk producing state, that's highly concentrated into a handful of counties. So I'm here in Tulare County, California. We think of California roughly representing about 20% of the U.S. milk supply. Tulare County alone represents about 6%, I want to say, is kind of a rough estimate there. So pretty big numbers when you think of a singular county having pretty big impact on the overall U.S. milk supply. And I always joke too, whenever we go and we visit dairies kind of all over, but here in Tulare County, the Central Valley, you can spend all day seeing tens of thousands of cows in just one corner of a county. Whereas in a lot of other regions, you've got a couple hours of windshield time between appointments where you actually got to move around a little bit. So a lot more dense here.
Curtis, give us a little update too. Has there been any more discoveries on transmission and how this H5N1 is spreading based on just the intensity of what it's looked like in the Central Valley?
So it still seems to be a little bit of a mystery in terms of transmission. I know vets and other industry professionals that are much smarter than me have been digging into all these sorts of things and doing lots of testing. It seems still somewhat unclear. Everyone kind of has their hypothesis of whether it's airborne or it's something with the birds getting into either water troughs or into forages or something like that. But I think it also kind of adds to some of the anxiety around it a little bit of, since we can't pinpoint exactly the source of something, it kind of creates this anxiety of how do we manage something if we really can't see it coming necessarily.
Yeah, absolutely. And then also within that, again, emphasizing the high level of milk production that comes from this pocket of the U.S. Have you been able to get a read for what that's looked like as far as the milk output coming from the Central Valley? Has there been a decrease? Have we been able to put a number or a reference around what that looks like for the milk supply?
It's actually been pretty interesting. We get relatively limited real-time data when it comes to milk production, but through various sources, we can kind of triangulate to see what's going on, especially in areas like this where there is a lot of dairies around and such. And what we've actually seen is dairies are losing milk production when they see infection and symptoms and things like that. That seems to be a pretty consistent pattern. But what we're actually seeing is, let's say 20% of milk production is lost for a period of time. There is actually an uptick in component production. So you may see loss in overall flow, but we are seeing consistently that during those impacted periods, that the overall output on the farms have been increased when it comes to the component levels within the milk that's being produced. We've been getting sources saying that the milk production in terms of flow may be down in certain regions, but actual component production has been up. So total pounds of butterfat, total pounds of protein. I mean, ultimately, since a majority of dairy products are going into manufactured goods like cheese and butter, milk powders and the such, ultimately the levels of those components that are produced are really the only thing that matters when it comes to the economic implication of what happens with the milk. So I think the shocking numbers when dairymen sit down with their nutritionists and look at the milk flow and look at the overall impact of what's going on, those numbers don't exactly translate through to a market impact, unfortunately, but it is still somewhat notable. And I do think there are some longer term implications from herds that have been impacted. We've heard with some repro problems and other things that have been popping up as sort of lagging effects after infection, that obviously with the current tightness of heifer supplies, how expensive replacement cattle are, it does not put producers in a great position to replace those animals or correct for any disruptions in the cow flow on the farm when these infections do come in. So it's kind of coming at a very inopportune time when you look at it like that.
Well, Curtis, we appreciate you giving your insights of what you're seeing in the area of the United States that you live and breathe in, and that's in California. And now we're going to divert over to our October markets update. So what's been going on in the marketplace, Curtis?
This is the time of year where harvest is in full swing. We can look at some of these numbers that USDA has been putting in front of us from expectations for what the corn and soybean crops are going to be and figure out, are they real, or have we kind of been saying that a 180 plus bushel per acre corn yield is ridiculous? And it seems like that's coming to fruition. The trend line yield has upheld yet another year where corn yields are staying strong. The last WASI report, USDA confirmed that. They did make some changes with feed usage on old crop and such, which actually did lower the overall expecting ending stocks for this new crop. I think everybody had the mindset from a grain farmer is, if we could get that expected ending stock number for corn below 2 billion bushels, that would feel a lot better. I like to think that somebody at USDA has a bit of a sense of humor, because the way that they mathed it out is we came out to a 1.999 billion bushel carryout for new crop. So that, it seems coincidental, but it is quite funny that the 2 billion bushel mark seemed to be the line in the sand everybody was concerned about. We ended up just below that. But even with those numbers out there, as dairy and livestock producers, people feeding animals, these are some burdensome levels for what we've been able to put up in terms of production, in terms of stocks. And it's really going to have a lot of weight on the corn market moving forward. And even, I would even say, more so on the soybean side of the equation as well. I know there's a lot of uncertainties. We're very close to a highly contentious election season. It kind of seems that regardless of outcome, we're going to see some potential trade tensions that could have some pretty significant ramifications when it comes to the soybean market. And with soybeans at, over a 500 million bushels in terms of expected carryout for new crop, that is a pretty staggering number and is going to continue to weigh on things here.
And Curtis, what are we seeing in the dairy markets?
We have seen a little bit of movement here for some of the front month futures contracts for both class 3 and class 4. We've kind of slipped from our highs here a little bit. We're still looking at prices which are north of $21 for both class 3 and class 4 futures through the fourth quarter of 2024. but we did lose over $1 a hundredweight in both of those over the last month. When we think about those in terms of historically where those are at from a percentile basis, we're still in the highest quartile. We're looking at the 90th percentile for class 3 and the 86th percentile for class 4. But a big portion of why we saw prices slip here over the last month was primarily tied to what we're seeing here on the butter market. So butter futures decline pretty rapidly, and it seems to be, I think this is the third year in a row now, we've had this consistent pattern where the butter market moves its way up. I think this year we've been talking about how butter futures and the spot butter market have been very orderly in moving up. And then we hit kind of a wall where we start to close out, where demand for holidays kind of tapers off and prices kind of retreat back to a level without the holiday demand impacting prices there. So we were north of $3 a pound in futures for a lot of these front months, and now we've kind of retreated into this 270, 280 range, which has pretty large implications on the butter fat value that goes into both the class 3 and class 4 formula prices. Butter production has ticked higher in August pretty significantly, meaning that we probably saw quite a lot of cream hitting churns rather than going into other areas. Butter stocks are still not super burdensome. And the interesting thing is actually when we're thinking about the butter market, we don't typically export a lot of butter. It's not really a big thing. We're more so influenced by the export market when it comes to milk powders for U.S. milk pricing and such. But right now we're at a pretty significant discount to the rest of the world for our butter prices compared to that of Europe. So when we look on a per pound basis, correcting for fat, since Europeans do have a little more fat in their butter than we do here in the US, they are over $4 a pound equivalent. So we are quite a bit cheaper there, but because we don't really have those export lanes set up where we necessarily move a lot of that product to date, at least, it seems like there would be an export opportunity there, but the specs are a little bit different. There's a lot of other complexity there, but it does have some potential long-term kind of impact of when we zoom way out, there should be some convergence in those prices over the longer period of time.
And when we look at the holiday season that's coming up, hopefully that's a good thing for butter.
We saw pretty good demand leading up to that. I mean, we reached some, near record highs and some good prices for the CME spot butter market in this year, which translated to some good opportunities for producers to look at some profitability, especially when we're talking about the outlook for feed prices and such as well.
Curtis, what do you see going on and driving demand for cheese? What's going on in that marketplace right now?
Yeah, so cheese has been a little choppy as of late. I know we've seen the CME spot prices for both blocks and barrels jumping around a little bit. We topped out at an average price of blocks and barrels of $2.44 back last month. We've since kind of corrected down to a bit of a lower level here. We seem to be hanging steady here in the 190s. We've been talking for months about what's going on the supply side. We had herds across the Midwest that were impacted by bird flu. We have expansion projects for cheese processing capacity that's going to increase our ability to make more cheese. But ultimately, when looking at things here, demand has been relatively steady and holding solid this year, not only domestically, but also from an export perspective. What's most impressive is when we look at things on the export side, typically, as we were saying earlier, the primary products that we export are our milk powders, the whey and whey derivatives, non-fat dry milk, skim milk powder, things like that. But when we look at cheese being kind of an incremental export number, that's been something I think we've been focused on a lot as an industry of driving additional growth there. And it seems that some of those efforts are working because in a high price environment like we're seeing now, it should be difficult to maintain export demand to get our higher price product to continue to flow. But we've been able to do it this year, which has been pretty impressive. So that's been kind of a little bit of a bright spot, I guess, looking at things which could continue to keep us here. I mean, there are still going to be some price sensitivity if we do stay at these high price points. Eventually, we can't keep those import orders coming in forever. But as things stand now, it's been a pretty good year thus far.
Yeah, a good year for sure, Curtis. And always that layer of uncertainty as we look towards the future. And with that in mind, what are your parting thoughts for dairy producers as they look to close out these last couple months in this fourth quarter of 2024 and prepare for 2025?
Yeah, so looking at it from a just sheerly margin outlook, I think it's important to continue to zoom out and just kind of consider what we're being presented with. I think you and I could talk for hours, Peggy, about who has the best crystal ball and who can figure out how high milk prices are going to go or when they may exactly move to a level where maybe they're not so sweet from a margin perspective. But at the end of the day, the only thing that matters is that as a dairy, you're buying in feeds, you're converting it into milk. The value of those feeds versus the value of that milk or your net, margin is kind of the only thing that really matters. And right now, looking forward, looking at all those factors, we're being presented with a historically very, very good opportunity to manage some of that risk. So we're kind of encouraging clients to just stay steady with it, stay proactive, continue to layer in coverage that offers flexibility so that if things are to improve, if we are to see a long period of time of sustained profitability, then great. But I think it's one of those things that we play defense a lot in this industry from a financial perspective of trying to do things to cut cost or create efficiencies that save dollars. Right now, with higher than average milk prices and lower than average feed costs, we're in a position to play some offense. So don't let the other team get the ball back. Let's score some points and run up the score while we can.
Hope you've enjoyed this episode of the Uplevel Dairy Podcast. If you like this episode, please do me a favor and leave us a 5-star rating or review in your favorite listening app. I'm Peggy Coffeen, and thanks for joining us once again on the Uplevel Dairy Podcast.